Ever wondered why the upcoming inflation numbers are creating such a buzz in the financial world? Let's dive into a comprehensive exploration of the highly anticipated Consumer Price Index, CPI, release for October and its potential impact on the market. The inflation landscape sets the stage for our analysis. The historical trajectory of the inflation index, dating back to 1915, reveals a noteworthy acceleration in prices since 2020, notably during the quantitative easing period. The Federal Reserve's keen interest in year-over-year inflation, with a target of 2%, is highlighted. Recent data shows a peak of over 9% in June 2022, followed by a dip to 2.97% in June, only to rise again to 3.7% in September. The focal point shifts to the impending release of the CPI on November 14, with the Producer Price Index, PPI, following suit on November 15. Core CPI figures, excluding food and energy, are dissected, revealing a modest decline from over 6.5% to just above 4%. However, this remains significantly higher than the Federal Reserve's targeted 2%. A crucial aspect of understanding the inflation trajectory lies in scrutinizing specific components. Shelter prices, a substantial contributor to overall inflation, are examined. Despite forecasts indicating a decrease, the actual data indicates a leveling off rather than a significant decline. Similar patterns are observed in used car prices, which have been in deflation for most of 2023, prompting a critical examination of the accuracy of data sources. The analysis delves into the dynamics of key inflation drivers, namely, food and oil prices. Both sectors show signs of deceleration, with food prices losing momentum rapidly and crude oil experiencing a substantial 10.3% drop in October. The potential impact of these factors on the upcoming inflation figures is explored, painting a picture of optimism regarding a possible downtrend. The focus then shifts to the real estate market, particularly shelter prices and rents. Despite projections of a decline, the data suggests a leveling off, offering a nuanced perspective on the complex interplay of market forces. The speaker highlights the contrast between official reports and on-the-ground realities, raising questions about the accuracy of forecasting models and their alignment with actual market conditions. Navigating towards market sentiment, the concept of risk-reward is introduced, cautioning against an overly optimistic stance. Acknowledging recent market momentum, the speaker suggests that the current risk-reward ratio may not favor long positions. However, a note of optimism emerges concerning the potential for momentum to carry the S&P to 4,500 and the NASDAQ to 14,000, contingent on favorable inflation data. In the concluding segment, the interconnectivity of various factors influencing inflation is emphasized, from oil prices to shelter costs. The analysis hinges on the anticipation of a soft landing and the role of interest rates in curbing inflation. A sense of cautious optimism pervades the outlook, with an acknowledgement of the upcoming release's significance in shaping market sentiment. As we delve into the intricacies of inflation data and market dynamics, it's crucial to consider how this information might affect everyday Americans. How might changes in inflation impact your financial decisions? Share your perspective and leave a comment above. Considering the potential market impact, it's essential to recognize that inflation data can significantly influence stock performance. If the upcoming numbers align with the optimistic outlook, we might witness positive momentum in the stock market, particularly for the S&P and NASDAQ. However, deviations from expectations could introduce uncertainty and volatility, impacting stock prices. Disclaimer: the analysis provided is for informational purposes only and does not constitute financial advice. Investors should conduct thorough research and consider their individual financial circumstances before making any investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information, and it helps us spread the message. Sharing is caring.